Trinh is a senior currency strategist at Royal Bank of Canada. She's joining us now to look at, well, what's going on these foreign exchanges, and indeed, in particular, the euro. I mean, are you surprised that we didn't see more gains for the euro today? Because, I mean, how much was already baked into this?
Well, we've had a bit of a relief rally on the back of the passing of the austerity measures, and it's certainly a positive step, and especially with about two-thirds of Parliament voting through. And the Eurogroup had actually explicitly stated that they wanted to see a significant majority voting in favour of that package.
Is it more of a weak dollar story than anything else, though?
At the moment, it's more of a positive euro story, I think, and given that this is a positive step in that direction, the timetable is very tight at the moment. There's lots of potential for missteps along the way, but it certainly does pave the path for a formal PSI to be drafted by the end of the week.
Well, they've almost sort of really played hardball on this one to, I guess, set the precedent, so anybody else coming to have a loan out of or a bailout package will have to meet the same sort of austerity measures.
Yes, Portugal is top on the hit list by most investors, but we think that a lot of the comparisons between Portugal and Greece are probably a little bit misguided. Market access is really the key there for Portugal, and there is a risk that they'll have to be needing a second bailout, and we don't think that it will go to a PSI as it is with Greece, but it will probably be more like an extension of the current bailout.
Sue, I just want to also talk, you mentioned there are two themes here. Now, we've covered one of them, which is, of course, this, I think you call it here, a short-term end to the Greek saga, so you're not saying it's all over.
Famous last words.
But we've also got the Fed in the mix, too, as well. And how much at the moment are people looking at the realistic proposition that we will have a further round of quantitative easing?
It's certainly a high risk, given that the Fed's sort of commitment, if you like, or conditional commitment to keep the rates at a low level until late 2014. Expectations of QE3 are very high, and that's certainly keeping the US dollar on the back foot from a yield differential perspective. And we see that playing out primarily through dollar-yen being kept at a low level and likely to push to new lows going forward.
Well, I mean, we see the Japanese authorities come in and support the dollar when we do see a bout of weakness for it against the yen. But, how realistic is it? Well, let's say, does it do any good, actually? I mean, that's the point.
It's always hard to know exactly
because we don't know what would have happened if we hadn't done it.
No, but certainly the Ministry of Finance's approach to yen intervention is really to manage its pace of appreciation as opposed to trying to keep it weak. And certainly we like to look at it from a supply-demand balance perspective, and we really struggle to see where the yen supply on a sustained basis is going to come from outside of sporadic intervention. If you look at a lot of the investment flows out of Japan to, say, US Treasuries, etc., given the low levels of US interest rates and global yields, the Japanese life-as hedge ratios are very elevated, 85 to 90%, and thus it pays them to actually hedge out the foreign exchange risk.
Okay. What about the Aussie dollar? I mean, 107 at the moment. Is that sustainable? I mean, and what is actually being priced in at 107, 108?
A lot of the rally in the Aussie dollar over the past couple of weeks has been partly due to the risk-on or relief rally in risk, but also a repricing of the Reserve Bank of Australia's interest rate policy with their recent on-hold decision, which was very surprising to analysts and markets.
Everybody's expecting 25 basis points. Well, virtually everybody. I think when you had three economists who were looking at no change whatsoever. But do they move next time, do you think?
I think there's a good 50% chance that they could hike. One complicating factor is the dilution of... Oh, did I say hike?
Cut, yeah, so they could cut next time round.
Yes, cut. One factor that is complicating factors is that the domestic banks are moving to hike their mortgage rates, and thus creating a tightening of financial conditions outside of the Reserve Bank's
policy. I think bringing the wrath of Glenn Stevens as well is not happy about them doing this too.
Absolutely. So for that reason, we think that there is still a good chance that the Reserve Bank of Australia is pushed to ease monetary policy by about 50 basis points by the end of this year.
Is inflation a problem there?
Inflation, according to the Reserve Bank of Australia's forecast at the moment, is expected to remain within target. And when inflation is within target and growth is sticking around trend, then the need to cut is less needed, if you like. But most of the risk with the Australian economy comes from the global growth situation, of which we're more than aware that the risks are very much to the downside.
Okay, and quickly on the Kiwi dollar as well. I think we're on 83 US cents right now. And what are your projections here?
A lot of positive domestic developments in New Zealand have been overlooked in favour of what's going on globally. The housing market seems to be stabilising, and the external sector is doing very well, with dairy in particular helping to support the economy. So we think that the Reserve Bank of New Zealand is on hold for the foreseeable future. Risks are that they may very well be forced to hike sooner than what the market.
2.5%, I believe.
Still at emergency settings, so monetary conditions are very easy at the stage, which is another reason why the Reserve Bank of New Zealand may be forced to hike rates.
Okay, any top picks when it comes to currencies in this part of the world?
We are very bullish on the yen. That's a high conviction call. We expect euro-yen to hit 90 by the end of this year, and dollar-yen to hit 70 by the end of this year as well.
That's quite a bold call, actually. We'll have you in later on in a few months anyway, find out how we are with those. Sue, thanks a lot for that. Sue